good morning, Trinidad and Tobago, and welcome to the Bourse Report. Happy Valentine's Day to everyone who is celebrating, of course. Today, of course, we're taking a look again at some financial earnings and financial reports that would have come out recently. We're talking today about first quarter results for two cross-listed stocks on both the Trinidad and Jamaican stock exchanges. And we're speaking, of course, about Massy Holdings Limited as well as NCB Financial Group. Both groups would have reported fairly surprising earnings in the case of NCB and some fairly expected earnings in the case of Massy. Let's take a look at what both groups would have reported and what investors might expect in the months ahead. Turning quickly to NCB Financial Group or NCBFG. Well, the group would have recorded an earnings per share figure of 5 cents TT equivalent per share, which is a fairly precipitous 30% decline from the 7 cents TT equivalent recorded in that prior comparable period, the first quarter of 2021, the fiscal 2021 rather, for that period ended December. Now, net result from banking and investment would have been down marginally, just around 2%. Overall, however, net operating income was fairly stable, up marginally, just around 0.7% from 1.59 billion TT equivalent to just around 1.469 billion TT equivalent. Operating expenses, however, did expand fairly aggressively over the comparable periods from 1.104 billion to 1.165 billion TT equivalent, a 5.5% increase there. And net profit attributable to equity holders or shareholders would have declined 32% from 169 million TT dollars to 114 million TT equivalent in that comparable first quarter period. So not the prettiest of results delivered by NCB for this most recently concluded financial period. When we take a look at what would have comprised operating income, well, as mentioned, operating income fairly stagnant, just that marginal 0.7% decline, but some fairly notable changes within overall net operating income. We see that there was roughly an 8% increase in net results from insurance activities from 371 to 402 million. There was also a 18% odd increase in net interest income, which is a positive driver from 597 to 703 million TT equivalent. However, this was offset by an almost 70% decline in gains on FX and investment activities for the group, falling from 254 million TT equivalent to just about 70 odd million over those comparable periods. Now, when we take a look from a valuation perspective for NCB with respect to investors and shareholders, we can see that there has been a fairly noticeable expansion, a rapid expansion rather, in that price to earnings ratio, that price that investors pay per dollar of earnings generated by the group. And that would have increased fairly steadily on the Trinidad, using Trinidad and Tobago stock exchange prices from 15.7 to 16 times way back pre-COVID to now its current level of 32.3 times on a trailing basis. And it has continued to expand, as we can see, over that first quarter 2020 to the current first quarter 2022 trailing basis. So investors certainly having some patience with the stock despite declining earnings. One wonders how long that will continue to last. Now, at a price of $8, NCB is, as mentioned, trading at that price earnings ratio of 82.1 times, which is well above the banking sector average of 21.3 times, offering a fairly unattractive dividend yield of 0.3% compared to the sector average of 2.3%. Now, with recovering financial markets, that could be set to change. However, let's take that as a grain of salt. Financial markets appear to be somewhat volatile to start off 2022. In fact, most financial markets would have receded in 2022 thus far, combined with those relatively high valuations and general economic uncertainty, despite some normalization of or subduing of COVID-19 cases at the regional level. Bourse is going to maintain a market weight rating on NCBFG for the time being. Turning quickly to Massy Holdings Limited or Massy for that first quarter period ended December, the group would have recorded a very good earnings per share figure of $1.93 per share, which is a 9.7% increase from the $1.76 per share recorded in that prior comparable period. The revenue from continuing operations were up just around 8.4% from $2.98 billion to $3.23 billion. Operating profits up 7.4%, and overall profit attributable to equity holders up 10.3% from $173.5 million to that $191 million mark in that first quarter. So pretty good progress for MASSY, earnings seems to be catching up to some of those lofty valuations relative to its own historical records that are currently being observed in the financial market. When we take a look at profit before taxes by segment for MASSY, we can see some good improvements, a 16% odd increase in that integrated retail segment from 127 to 148 million, fairly flat in the gas product segment, and an 11% odd increase from 46 million to 51 million in the motors and machine segment. So some progress being made, of course, in the revenue and also in the profitability, more importantly, segments for MASSY in the most recently concluded financial period. Now, of course, the big news in recent history for MASSY would have been its cross-listing on the Jamaican Stock Exchange. And while taking a look at how the Jamaican stock price has fared relative to the Trinidad and Tobago stock price, well, that in that green dotted line, in TT dollar equivalent, that GSE or Jamaican Stock Exchange closing price for MASSY, after initially holding its value relative to the Trinidad stock price in its initial first 2 to 3 days of trading, would have consistently declined since then to just about the equivalent of $85.51 TT as at Friday's close, compared to MASSY's Trinidad and Tobago Stock Exchange trading price of $105.95. So roughly a 20% discount in Jamaica relative to the Trinidad and Tobago Stock Exchange price for MASSY, which is fairly consistent with what we have observed as brokers and investors, of course, for Jamaican cross-listed stocks trading in Trinidad and Tobago as well. Now, at a price of $105.95, MASSY is trading at a price earnings ratio of 12.9 times, below the sector average of 17.2 times, but above its historical trading ranges of around 10 to 10.5 times. So on the basis of increasing revenues, good geographic diversification, of course, still overlaid by that economic uncertainty and relatively elevated valuations to its own historical trading levels, Bourse is going to maintain a market weight rating on MASSY for the time being. Well, that's it for this week's edition. For more information, you can give us a call at 2-BORSE or 226-8773. Email us at invest@boursefinancial.com, and of course, check out our website where all of our research is free at bourseinvestment.com. And you can catch us in today's business section of the Trinidad and Tobago Guardian newspaper. Stay safe, get vaccinated, and see you next week on the Bourse Report.